Sweet, let's rock. Well, welcome, Nick, to the first podcast. I was trying to think of a good name for it, and I just came up with the simple thing of Talk with Traders. Somebody suggested to me to come up with a different name, which was like Zero Stop Loss Podcast, but I thought that would be a little bit degenerate. So I just come up with this simple one. And yeah, thank you for coming on. Really excited to hear about your thoughts and opinions on the market. Obviously, it's been an action-packed week, full of just a lot of opinions flying around on Twitter. A lot of people making various different wild predictions of Bitcoin going down to 12K and 15K, and other people were saying it's going to go to 100K. Yeah, what do you make of it all?
Well, that's really been a busy weekend. Also, probably want to start with thanks for having me here. I'm also really excited to be the first guest on your podcast. So let's make it a remarkable one. I usually put this perspective that I'm pretty indifferent where it's gonna go, because you can guess, you can make it as many analysis as you want, but at the end of the day, as a trader, you just have to position yourself with the right exposure, in my opinion, and just even like as a thought experiment, like you can have a guess, like, yeah, we're going to 100K. Tomorrow, some bad news coming out, like really bad news, let's say, and all analysis is invalidated. So it's pretty much like only the future will tell us where we're going. But so far, it's looking pretty good. Coin will probably start ranging right now, like ceteris paribus assumption. If nothing changes, it will start ranging. Alts will be shooting. There will be like alt season, and after that, it's like right now it's place your bets time for Bitcoin. We will have all bets placed moment there, and we will see where it goes. But it's just nice to have some probably nice some positional exposure from good points. I mean, it's never a bad idea to be catching extreme deviations, some major candles, trying to potentially get yourself a nice entry. And I'm assuming right now, like so far, the consensus is it's more of a long scenario. So yeah, just trying to grab some dips, if you're a knife catcher specifically, or even just having some limit orders placed beforehand, buckets ready. That's personally what I'm gonna do. So far so good.
Yeah, I mean, right now it appears like some of the best plays are very sort of narrative driven. And Bitcoin is obviously just trading off of this ETF narrative right now. And it's a question of like, obviously it's a speculative rally for now, and could it be sustained? So it's sort of gonna keep, I think it's just gonna keep grinding, and as you said, there'll probably be some capital rotation that comes in later on down the line to some other coins. But anyway, we can get into some of this stuff later. I wanted to ask you a little bit, about you, allow you to introduce yourself, how you got into crypto, and what you're doing at the moment.
Well, it's gonna be a bit of a story probably. I got into crypto actively started trading like in 2020, even though I started just buying some spot in already like mid-late 2019, essentially just from a friend's recommendation. He showed me a few nice coins. It was at that moment Link and VeChain, and I personally been following Bitcoin and Ethereum and Ripple for a while. First time I heard of Bitcoin was like 2013, 2014, where my uncle told me, hey, there's some sort of internet currency, you can mine it. And he was probably like, coming from the perspective of a miner. And he said, the future is after it. And I was pretty young at that moment, looked briefly into it, just essentially played around, like haven't opened any exchanges, haven't bought anything at that stage. But I was already aware about such thing existing. And yeah, just, heard about XRP. I think it was like 2016. Ethereum as well, like 2016, 2017. Obviously, saw the pump to 20K in 2017, but also haven't participated in that because I kind of found it a bit late. And at that moment, I was actually like, I started to roll my journey in trading. I would say probably in investing would be a better word to say it, like from, stock market. In 2016, I heard about the wonderful, I even like if you completely new, it might sound magical, Elliott wave theory, that you can, using the waves analysis, just forecast where the markets will go. And it sounded really appealing for me, like completely fresh to the markets. And I'm like, hell yeah, I'm gonna study this and I'm gonna make money. And that's pretty much how I got into like technical analysis thing as well, like looking at the markets, analyzing charts, and learn along the way supports, resistance, trend lines, all of the necessary stuff. Bought some. Yeah.
So like most traders, you first were into your regular sort of technical analysis style trading, Elliott waves, support and resistance, RSI, things like that. But then you must have at some point transitioned into a little bit more advanced, and you obviously started analyzing data. When did that happen? When did you make that sort of transition?
I mean, the main transition probably was in 2020 when I discovered the depth of the market tools. In my case, it was Cscalp. Still probably up to this date, one of my favorite terminals, or like one of my favorite tools to ever exist, like, for trading. I think it's really nice. And probably one of the best ways to start like active intraday trading, scalping. At least that was my journey for trading specifically. And that was the moment, 2020, when, lockdowns kicking in, the markets being really volatile at that moment. With March deep of everything, S&P, Nasdaq, Bitcoin. And yeah, I decided, on a lockdown, not much to do. I can play some games, which I did as well. But at the same time, I decided to go heavy on it because I had some spare time. And yeah, it was probably one of the best decisions, to jump into active trading. I watched a lot of videos about order flow trading, about trading the order book as well. Just because the idea, when I started learning about technical analysis, I was not really big fan of specifically the Fibonacci levels. Personally, it's kind of look at it with some skepticism. But I really like the idea of, support, resistances, just something simple. And in my case, even when it comes to stocks, just one quick sentence to describe the market, from a really simple perspective, what to buy, what to invest, is just look at what people are actively using. If in my case, I bought, Apple, Nvidia, and Nike shares, just something what will stay here for a while, and markets growing long term. And similar as well, it's hard to apply it to cryptocurrency market because a lot of projects don't have something really usable. Only very few, I would say, actively useful. But still, the perspective and idea of buying something what actually have some sort of application to it, it's probably one of my fundamental types of trades. And even when I was started doing stock investing, I was looking at stocks that have actual value to it, and using technical analysis already for entries potential. Again, support, resistances, breakouts mainly is the thing I'm even up to this day looking for.
Yeah, if you're anything like me, when I first started, I had 20 different indicators on my chart. It looked like a right mess. And now I've got maybe 2 or 3 at most. So I've cut down a lot of the noise. Yeah, like you said, support and resistance, looking at sell side and buy side liquidity and things like that is now one of the top things that I look at. And it's so simple. Yeah, I think a lot of people overcomplicate things, don't they? They just have so many different indicators that you end up getting analysis paralysis or something.
I think everybody, when they start, they try to kind of come up with something complex. And I think that if I'll find the right combination of these 10 indicators, maybe right settings, I'll find the unique trading strategy which will just print. But over the journey, once you learn, you probably just you have to try to come to conflict. Like a lot of people at the beginning try to like think that the edge, the alpha, whatever we call it, or just like, actual profitability is in complexity, in complex systems. But usually with the more experience you get, the more you try to simplify things to a certain degree, obviously. But if it's discretionary trading, scalping, it can be pretty simple in terms of analysis. Like, yeah, there's, support, there's increase in volumes, we're aping in. As simple as it gets.
Yeah.
It's just a matter of getting the right exposure, I think, and having the reason for an entry, what matters.
Yeah, I mean, you mentioned that you traded traditional markets before. I actually just got into crypto. I think it was a kind of a blessing in disguise, even though it was very hard. I didn't come from a traditional background. What sets apart the crypto market from, say, like trading stocks? Like, what's like the main differences there for you?
It's the regulations probably. And I also
Yeah.
don't want to say that I'm like having really substantial experience in TradFi markets. It was just like, something I tried, like, as independent, investor, even not independent investor. It was just like, just trying to allocate my money somewhere, my personal savings. And it was done on a really like amateur level at that stage. But again, the regulations really set apart this market, and probably it's like its aggressiveness. Like the market is super volatile sometimes, it's highly manipulative, it's very illiquid as well, specifically for a lot of altcoins. And if you look like if you compare it to stock market, like the liquidity here, it's quite of a problem. And I think it's one of the reasons why a lot of institutional TradFi, not even traders, but like actual institutions, banks, hedge funds don't come in here because there's not enough liquidity. But once they come, there actually will be some. That's a paradox.
Yeah, especially with the altcoins, obviously, which sort of brings me to it brings to mind what's going on now with TRB. I'm itching to ask you the question about your trade. Obviously, we've spoken before about this, but it looked like TRB was another case of a DWF lab type move where, perhaps there was an accumulation there of supply and then just, TWAPing of a spot coins, and it just created this massive spread between the spot price and the perp price, again causing funding to go highly negative. And I know that you're an expert at catching these types of moves, and I was wondering if you could sort of break it down for us, like how that move actually happens and how it works, how do you catch a move like that, and how do you know when to exit? Because there's a common misconception that if the funding is very, very negative, it means that a lot of people are shorting. But in the case of these manipulated moves, it often means that that move may be coming to an end, and I think that confuses a lot of people. So it would be great if you could give us a bit of a breakdown on that.
Yeah, I mean, I'll probably break it down as well into two separate questions as well. Why did I enter there in the first place, and how those moves usually perform? Because overall, like the second question is really interesting, and there are not much information about it online. Or like it's just Lex coverage, I would say, probably. But the reason why I got into the trade was actually super simple. There was a breakout scenario. Like you could never forecast a coin doing 50x, let's say, like on 5x, 10x. You can never forecast those things because usually it happens in the moment, and as well some sort of momentum ignition happening there. And when I was entering the trade, I was obviously not expecting, yes, this thing will go above 100, because at that moment it was like 13.5. And the reason why I got it's just I saw the breakout scenario, I grabbed the breakout, and as well there's a lot of like my systematic trading involved in terms of like I usually like to leave runners, so I rarely close all position in one take profit. Let's say like I actually never take close like positions in one go. I DCA out, and for this reason I just took the breakout, fixated some of my profits and just let it run. And it was keep on going and going and going. And I'm like, okay, let's see how far can it go. And we are at, what is the price? 115 now. I'm still holding this runner and just already like at this point, I'm thinking of like floating because it's quite a substantial growth. But essentially the point is just you get the right exposure to yourself and you just hold on into it. Like I'm personally have no idea how far can it go, but I'm assuming at this stage it already might even, go for the all-time high, like one of the coins throughout this year, which will actually make new all-time high.
Would you be able to break down the mechanics of how that manipulation actually happens? Maybe you could share your screen and show us how you did how it actually works, that type of manipulation.
Yeah, let me show my screen here as well. I'm just doing my terrible drawing once again. Let me check. Yes, I think you guys should be able to see it now. Let me just grab a new layout here. I like to draw just this dark space and yeah, just simply draw. I think you guys should be able to see drawings, right? All right. I mean, there's a few distinctions between like we're all probably starting, with coming to the pumps itself. A lot of pumps, most of them are manipulated. Rarely it's like, a lot of specifically at this point, like a lot of just like, there are more buyers than sellers. It's rarely this simple scenario. And usually I can be separated into a few different scenarios where there is a market maker / market manipulator, not just the regular market maker who just plays liquidity on bid and ask side, but already the market manipulator who either have emission control or who doesn't. And those are two distinct moves. Like, for example, if you see something just like, ranging and pumping out of nowhere and then just doing like this, this is a pump performed by the market manipulator with no emission control. If I'm talking about like, let's say 20+% pumps, not just the 2-3% spikes, which can happen, just from illiquid markets. But the case with the market manipulator with emission control, it's usually like, scenarios like DWF type of trades, where there's certain market maker who is signed to a specific coin. Like, essentially the project behind the sign the market maker who will provide liquidity to the market, but just because the markets are unregulated, there's a lot of wiggle room about how they can perform this type of actions, how they make their operations there. But usually happens again, like, the market maker have some sort of emission control. They obviously interested in, profiting from this move. So quite often as well, that DWF type of scenario, for example, there's like, been jokes around that DWF does as simple as just like, as soon as they receive the coins, they just dump on the market. So the price goes like this and they just dump. But it comes well from the inventory control perspective.
Are you talking about like on-chain transactions? Like sometimes they do a PSYOPs?
This is also another interesting case as well. Like DWF already became the self-fulfilling prophecy because, when they transfer funds in and out and people just watching it and they trying to front run. And I'm assuming sometimes DWF doesn't even have to do anything. There's just like, this kind of market reaction to their actions.
Yeah, they've created quite, they're quite notorious. So I guess there's a lot of people watching their wallets right now, and whenever they receive a certain coin, as you said, it becomes self-fulfilling prophecy. Everyone wants to buy it. So you'd think that they would be very carefully and quietly manipulating, accumulating a certain coin, perhaps even on a different wallet. And then when they're ready, they just pull off a little bit of that supply into their wallet from Binance or whatever, and everyone goes wild for it.
That might happen as well. Like, I don't want to speculate on this, like if they accumulate on other wallets, on other accounts. Could happen like with just for any market making firm as well. Depending on the type of aggressiveness, I would say probably. But it's just something we would never know. And for a reason, because they're trying to hide it from us. But at the same time, the major type of like, pumps usually done from the perspective that there's market manipulator controlling some sort of supply. And essentially they, like in cases of tier B, they pretty much able to move the price as far as they want. It's just a matter of like not moving it too far out so that they cannot already offload their position. Like there's like kind of break even point where optimizing the efficiency of the pump so they can exit with with confidence as well, because they have a lot of usually as well at tier B there's some, I'm not sure and 100% sure about this, but I think there's like entity controlling 50% of supply, which is quite abnormal. But that's how those pumps usually done, because if you have like majority of supply under your control, you essentially become the market. And like, let's say with the case where it's, just a simple scenario, you can just dump the price, you can accumulate on this dump some futures, some sort of accumulation here, and essentially you just start moving the price after it, as simple as it gets. You just dump this to kind of get yourself better prices, to cause momentum, to squeeze traders, because as well, there's some sort of also efficiency, I would say, to squeezing the market, just because your impact will have more effect just because of some traders being liquidated, some traders leaving the position. So like your initial order flow will move the price more than it kind of should have. So for this reason, like you dump, let's say your dump caused only this much of a move, but the rest is just done from the exits of other traders, whether it's forced or not. And you essentially buy out all of this zone, just like theoretical simple scenario, and already get yourself an entry on the futures. You also have spot. Ideally, you buy back the spot which you dumped first and in this zone, and you just start moving the market, because you also have this cash which you just got from dumping on the market. Simple as it gets.
They could only do that if the market cap of a coin is pretty small, right? They're not that big of a fund, are they? So they must be targeting coins of like 20 or 30 or 40 million, at most market cap. Is that right?
Yes, I mean it's initially usually done, with smaller market coins, because obviously it will be harder to move something like Polkadot, Cardano, which have, I think even up to this date, abnormal market capitalization of a few billions, and just market is accepting it. And even though it's still dump heavy, like 80-90% of them, and still above a few billion capitalization. So it's obviously done easier with the smaller cap coins, because like if the coin have 10-20 million market capitalization and you get yourself hands of like 5 to 10 million, which is not as much in absolute dollar value, like, specifically even for TradFi markets, you already can have enough space to just play this like as you like. And what they did at first of all, what was with tier B really interesting, is the spread between spot and futures, which was like more than 20-30% for like a day. I mean, it was like varying, but at a certain moment it reached like 30%, 40% spread, if I remember correctly. And it was literally lasting, like that whole spreads type of scenario was lasting for about a week. Like it was like, from 2% to 30% varying. And even the most interesting case here is we had like, initial pump of the tier B with the spread, which was absolutely heavy, and like kind of a lot of traders might think, oh yes, this is just like, the kind of, because the spot was above the futures.
Yeah, that's right.
And a lot of people might think as well, like, yeah, like, there's a lot of shorters on the market, just trying to short the coin, which potentially could be the case. There might be, a mixed scenario. It's quite hard to break down what was the impact of like actual market manipulation, what was the amount of people shorting it. But right now we don't have the spread. Like, the coin is above 100, it just moves up. There are no spreads. So like, where the spread went? There's still, I'm assuming, a lot of shorters, and it's kind of just something what makes you question like why that spread was there in the first place. Like, for a week, but why there are none now? Like, what changed? And most likely, like even not most likely, but the answer is just because this spread was artificially controlled. Because if you control the supply, you can constantly keep the price in spread. Like, essentially, and how big is your wallet is how long you can control the spread. Just by
Do you think
milking
that it's possible that they would be, using their collateral in some ways to create large spoof sells in order to suppress the price of perps, whilst TWAPing, on spot in order to artificially create as big a spread as possible? Because it's like that saying, stir the waters to catch some fish. people are looking to exploit the funding and they go long thinking that they're going to get paid out every single hour. But of course, that spread is not anything to do with what it normally is, which is we've grown to think that is to do with people shorting, and that's what's creating the downward pressure on perps. But in this case, they could just be putting very, very large offers above the perp price and just preventing it from going up whilst just sending the spot price like crazy. That's what it seems to be to me, but I was wondering what your take on that was.
But essentially, just we have to remember as well the positions, what like this entity behind the pump have, as they have long futures. They also have some spot inventory, and they also have some actual tether, USDT as extra fuel, just one depending on the mix. But their inventory contains long futures, which they can potentially be offloading during the spread. But usually as well, like back in the day, even throughout this year, I would say, there was a lot of spreads which were caused specifically just to kind of create this environment where you just milk a bit of funding and you dump after, kind of holding the price. Because once you create this this environment where you have spot price above the futures, you obviously have some shorters, but you also have those people who try to long and essentially act as their counterparty for you closing your long. So because you need some liquidity, and usually those positions are quite large, and you've seen as well those spreads being like this, maybe initial concaving and just dumping quickly. Something like this. It's the moment where they try to dump, and it was the first thought like tier B, just just regular already at this point distribution zone, but it just went out of control. And it's also a good question because sometimes the market is an interesting thing. They might not even have planned to move it up to 100, but just the market scenario, what they gave them, the cards they've been dealt, essentially created favorable positions for them just to keep on pushing the price up. So maybe because again, this is not something like they control the price, but at the end of the day, it's open market, so you can never forecast with certainty what's going to happen there, because it's something what's going to happen there. It haven't happened yet. And maybe the initial plan was to pump it a little bit, create the spread, milk the funding, create enough buy side liquidity so they can dump their future position, they can dump their spot and just kill like this again. But something stopped them from just completely killing the coin, and it remained active for even up to this date, already essentially 2 months in. We're happening to witness the tier B pump, which will be infamous, for the bear market. But the idea is again pretty simple. Is once you have spot, once you have emission control, you can push the price quite far, pretty much as far as you want, but there's still some limit. And usually as well in these scenarios, there's some sort of futures position in long, because that if you will be pumping the price, you just get yourself a bit more exposure in a separate market with separate liquidity, pretty much.
So it sounds like it's momentum ignition. So they take a lot of the supply first. They suppress it for a while. They ignite it. It runs. They create spread, and then it's kind of down to the greater fool theory, where it kind of can just start running by itself in a sense. Once everybody's on board, they can then just start distributing it. Then the spread seems to close up, and then once the spread is closed up, that's the end of their trade pretty much, and the price just dumps a lot of the time and does a Burj Khalifa type thing, doesn't it? But it's not always the case. Sometimes it can go a little bit further than everybody expects, even after the spread is closed up. So yeah, like you said, it's not exact science. It's quite hard to time it, because it could go a lot farther than maybe even they expected.
Yes, it's just joke that went out of hand, essentially. And the momentum ignition also plays an important role. And at the same time, since the market is pretty liquid, there are not many coins which move like that active. It just gathers a lot of attention from other traders, and at certain point, market maker, market manipulator, whoever might not be that much responsible for the pump. The rest, I mean, they're still kind of controlling the situation, I'm assuming, okay, because it's obviously all kind of the guesses from the perspective how it could be done. And just from my personal experience, our experience of spread fighter team, we've been just dealing with the market, assuming the market is quite crazy.
Yeah.
And for this reason, yeah, again, there's some sort of involvement and some sort of redistribution, and eventually the TRB also will come to an end. But the good assumption to have as well when you see those pumps, it's not the organic type of growth most of the times. Like there would be some sort of organic inflows, from actual traders trying to capitalize on some sort of moves. But a lot of pumps like this, they don't happen, for a reason. And just even it comes as simple as if you try to put significant volume, let's even take another example, like let's say we collectively want to do a pump of a coin, right? For example, like we want to pump tier B, but there is a signed market maker. We can push a lot of volumes into it, but it will mean revert. Like the pump will not continue essentially. Like market maker will just sell us what we're buying. Like he will supply, he will supply us for our demand, and pump won't happen. And it's coming to a question like why certain pumps happen, and essentially most of the times they're orchestrated by someone controlling this type of pump. And majority of the pumps, even during the 2020 and 2021, there obviously been a lot of retail inflow and just crazy amount of liquidity in the system. But at the same time, there's still been entity which kind of decides where the pump might stop. How far can it go? How far can they push it? And even the Solana pump, pretty much the pump at the end of the bull market was mainly orchestrated by the FTX and Alameda. I'm assuming it's already not a secret to anyone at this stage.
Yeah, you guys have built some pretty advanced algorithms to detect these types of things. So I mean, yeah, it's pretty amazing to see. I wanted to ask you, like, how would you most describe your own trading style? Are you more like a scalper or a swing trader, a day trader? Like, how would you sort of describe your trading style?
I would say it's a mix of just my experience and what I, kind of learned so far just by trading on this market. And originally I started as a breakout trader. Momentum essentially comes down to I like to separate, majority of the strategies can be separated into momentum trading and mean reversion trading. And I start as a momentum trader, just catching the breakouts, because I think the strategy was pretty much one of the best ones you can do as a independent trader, small trader, big trader, because the liquidity also allowed you to push quite good size. Even though I haven't had solid size at the moment, it still let me trade trade pretty good. And it was really simple scenarios like just breakouts trading, all-time high, for example, breakouts. I mean, pretty much if you look at most of the all-time highs breakouts during the 2020 and 2021 did quite significant pumps overall, a continuation of the move. It was rarely the fake out in 2020 and 2021.
How did you deal with those patterns which sort of target breakout traders, like the power of three, where you have your accumulation, manipulation, and then expansion? Because that's like a breakout trader's worst nightmare.
I mean, I'm assuming you're talking about the dip right before the main move, or is it something else?
Yeah, it's kind of like let me see if I can.
I can also, draw, because usually most of the pumps as well, the reason why breakout trading makes sense in this market, and again, it comes down probably in terms of finding it, technical analysis is probably one of the best ways how you can, just spot those things. But it's not because technical analysis forecasts things, it's just because it kind of the market mechanics, when you trade actual market mechanics, it's making a bit more sense. Just because let's say you have some sort of consolidation, let's say whatever it was, just let's say it was anything before dump or pump, but we have some sort of consolidation here, and there have been, just classic support resistance zones. And this support resistance zone kind of doesn't, it's not the most important part here, but the fact what's hiding behind it is there's stop losses and liquidations cascades. So like, you know, a lot of traders who trade this consolidation again, and this consolidation essentially acts as a moment of place your bets type of thing. And somebody will enter here, you know, let's say put their stop loss here. Somebody might, you know, just like be buying some sort of zones, might be shorting here and place their stop losses. And eventually there will be some point, like, you know, of marketing. Like, essentially, there's a lot of fuel behind those support and resistance zones. And again, technical analysis doesn't guarantee you that, you know, the price will go up. It doesn't guarantee that the price will go down, but it kind of entitles you, like, as you see from those support and resistance zone, that if the price will reach this consolidation, like there will be an impulse collecting those. And usually as well, there are some sort of market participants willing to take this liquidity because it lets them enter the position. And quite often you see like fake out and dump. Pretty much, it might be quite feral sometimes, just because they took liquidity, they entered short here, and they're just riding already for this liquidity. And then it might start consolidating again and might even break out here. But there's a lot of liquidity, and just because the market again is pretty liquid, the price is always chasing liquidity, and sometimes it might collect this liquidity not even intentionally, just as a, like, you know, theoretical type of scenario. Most of the times it is, because, you know, the market participants who have some sort of ability to control the prices in short term, because I mean it comes as simple as just, you know, making one big market order here, or just like, you know, like having some sort of quick TWAP, you know, swarm orders, and you just push the price to that point where it will come as a cascade, where, you know, like in this case we have stops of shoulders, like, you know, if it goes up, and it's stop or liquidation for short position, it's a buy order. So, and they just start buying market orders, you know, pushing the price. And because usually there's some sort of liquidity as well around the zone, like, you know, the resting limit orders, but there's a certain moment, there's very few of them left. And as well, a lot of liquidity you see in the order book is just market makers. Like, you know, for example, on Bybit, you see the price, like, let's say that's our price, that's our price right now. There will be a lot of limit orders 1% below. There's like a huge block of liquidity 1% above and below, but if the price were to move down, again, my drawing is terrible, price were to move down, this liquidity will also move down. And essentially this liquidity exists there just to catch those spikes, like, you know, from big orders, bump and rebound, something really quick, you know, what quick impulses. But this is not the real liquidity type of thing.
Nice. Yeah, I mean, it's that type of breakout trading, so reverse breakout trading.
But yeah, the main idea as well, as we start talking about the breakouts, is when you search for some sort of consolidation in the zone, it might be ranging, it might be not. Usually, like, quite a lot of them look like something like this. Might be a bit small fake out here, some consolidation, fake out here, but it still creates some sort of zone here and here. And it's also a really interesting, like, form of like trying to find trades. If you see there were a consolidation and there were breakout from the consolidation over here, like, you know, maybe usually as well the volume spike up here, maybe like fall up later, but it's just, again, taking this knife of a fake out, and it's worth taking this potential long, because if there was a really quick reaction rebounding from this dip, there will be some sort of, like, it comes from the perspective where the price have to go, because liquidity here was already taken. Most likely it will go and collect this liquidity. Then it might as well, and I mean, if you trade market for some time, you will see this happening pretty much every day. You know, there's consolidation with small wicks above, beyond the price, and eventually there's a final move out of this consolidation.
Are you using anything to sort of confirm that it's going to be a reversal, like you know, maybe you're looking at order flow when it gets to those points, because, you know, there's always a chance that it could just break up through and not reverse. Like, what's sort of like, what's your confirmation of this sort of theory is going to plan?
Okay, right now I do less of those trades where I'm just like, collecting small sweeps of the consolidation. Like I'm mainly doing some more percentage move prices, just impulses, essentially. And net catching as well is right now probably my go-to scenario that I'm looking for. But back in then I was trading this. You just look at the order book for the futures, for the perps. You look at the order book for the spot, and you just try to gauge the activity, what's happening there. Because usually, if you would see, like sometimes it was like right now, markets get harder.
Yeah.
It's not as easy to trade. Back in the day, you literally were seeing, like, for example, some limit orders placed, like right here, for example, right here, right, and prices coming closer here, so you might potentially place your limit order, like considering, again, I'm trading pretty small size at the moment. So you can just front run those limit orders, and they are real limit orders. The best part, like right now, you will rarely find some real limit orders which just stay there. Aside from maybe round prices where you have like like $1, $2, $1.50. These round prices which just collect natural liquidity, attract, because if you if you're trading from your phone, you won't be placing limit order at 1.4957. You'll be placing it at 1.5 most likely.
Yeah. You ever tried to trade from your phone?
Just maybe closing the position sometimes, or even buying some spot if there's some sort of something, and I'm not on my computer, but I see maybe some really interesting scenario. It's not the futures trading, because again, I need my terminal for like with more accurate execution. But if it's just if I have to close position and I'm already like if I'm outside, if I'm going to sleep, just seeing something pumps right before I'm going to sleep, and I have this position, I just might close it from my phone, or take some profits, let's say.
Yeah,
close portion of it. But I would say trading from home, it's possible, but it just doesn't give you that much. It's a bit, it's slow. Like I don't know how to describe it. It's just like
is Spread Fighter mobile friendly? That's the question.
Not really yet. Not really. Like, it's not encouraged to open Spread Fighter just because you have like dashboards like this, which will. Oh, TRB just dumped. I see it on my side screen. 8% TRB dump.
Yeah.
All right. I entered a little bit size here, just taking some trades in the meantime. Let's see how it goes. Just classic knife catching. Was there funding? No, it was just like dump of some sold volume. Just entered some size. Let's see if there's a quick rebound. We can even probably spot it somewhere here. Yeah, we see power trades. Yeah, that was what happened just now.
Wow. Were you long? Were you still long, or did you take profit already?
I still have long on Bybit opened, and I have Binance for just scalping this because I took a few shorts. I also
you want a minute to
we're
close
looking
the
for
trade?
potential. I think it still might be up because again at this point, I believe it might go even higher. I mean, this coin is highly manipulative, so it would make sense for it to just do massive clear outs once in a while.
How do you deal with how do you deal with the emotions in such a volatile market? You've got you're up. It takes a few days for it to gain 10%, and then in 1 second it loses 10%. Like, how do you deal with that?
Oh, I mean, it's probably already an exception of reality. It's like the crypto market and overall, it's just the trading itself really build out that resilience in me, like patience. I was really impatient as well when I started. I had a lot of FOMO, and specifically as well, in like if you remember 2020 and 2021, that was a place to be, and it was pretty hard for less experienced traders because you see coins pumping just like 100x, like really massive pumps there. Oh, this thing just keeps on going. Look at this.
Jesus Christ.
That's impressive. That's impressive.
That's a virtual leaper right there, isn't it?
I was just recently, just today in the morning.
Where's the nearest liquidation pools? Where's it going down to?
Let's see if there's anything, because at this point, like the price moved so far, so just estimating the main liquidation cluster around this zone. The model haven't picked up any. Essentially, there will be a lot of liquidation around. I think there are already a lot of liquidation now. We can just sort by TRB here.
It may be going down to 98. looks like 98. There's a decent gap to be filled there. So I wouldn't be surprised if it went down to like 98.5 or something. But yeah, it's going straight down there.
Oh, there's just right now there was a quick pullback. So you see, there's usually probably it's better to open.
Oh yeah,
usually when you see quick, I mean, it's probably just keep on dumping for some time, but at the same time, it's actually might be a good time for entering a knife. Usually how it happens is when you see price dumping like this. I mean, specifically, there's some sort of like slowdown period, and there eventually will be like this, like small spike, and it's assuming like it's 1 second chart, for example. On 1 minute, it will be still like big candle, but you would see a quick pullback throughout that candle, like one huge impulse, and you see what's happening now. And I grabbed my knife at 101.07.
Look at that open interest dropping off like a stone.
Yeah, I grabbed just a quick knife right now.
You looking to scalp it?
Yeah, just enter, some small size here. Just not
There
actually
we go. We
full
have
size on
a true trader trading in the middle of a pod.
Yes, like can't break the habit.
You can't take the man away from the charts, not for 1 minute.
Yeah, always have this open as well. I think it's like the best way to be catching knives. Is just like constantly being around the market, and just watching what's happening there and just positioning yourself like when you see, because this move, what was like almost minus 15%. Yeah, like 13%. So there will be some sort of pullback here. It's just reasonable to expect it. Like you never know where, because as well recently there have been a lot of pumps which just dump 40% in the next like 8 hours. Yeah, I'm out. Or not really. No, I still haven't closed it. Yeah, let's see. Yeah, I closed half. So and I'll just gonna place on the rest some hard stop and we back to the podcast. But again, that's what I'm personally looking for, even in the market, when trading. Some sort of like volatile moments like this, where you, because it comes from the perspective, like I at least have this idea on the market. If you were to catch long, let's say, like if you want to have some sort of good risk management, in my idea, from my point of view, at least, you either jump in early, or you already scalp the rest of the moves, because like like let's say something like consolidates, maybe shows like this and pumps heavy, like entering long here would be kind of risky, because it might keep on going. Sometimes it might just dump, yes, like this. So what I'm looking for, either to grab some sort of top, at least to try grabbing the top. You rarely know, but at the same time, there are a few ways how you can get yourself into a, say, plus EV position, or already wait for the dip and try buying the dip here, because it might just rebound.
And so I'm guessing, like, what sort of, how do you sort of do your sizing and your risk management for such trades? Are you risking 1%, or you're doing a bit more? How do you normally sort of set up your risk management?
Risk management for navigation, yeah, I usually use as well most of the times hard stops. Just because, again, it's either you catch actually the top, like if you just manage to see that final clear out with majority of volumes, you see same as here, highest volumes already. You see that the speed, like this candle had less volume than this, and it was more than this candle. So it comes from the perspective that there are a lot of volumes being pushed, but it doesn't have that severe impact on the price. So most likely there's a scenario where majority is leaving their positions and somebody just buying this out. I mean, in this case, somebody just bought a chunk of this position, of essentially the liquidations and stops, and that's passive position already in terms of just trying to ape in here and having some sort of hard stop, or it can be done as a soft stop depending, because when taking knives I don't push very substantial volumes, because knives in general assume that you have less capacity, because usually trade on the wicks, and the main way to enter it's just trying to eat that incoming flow inside of you, right? Just potentially by placing a limit or just even market aping into the liquidations. And this way you essentially act as a counter flow for the liquidations. And that's as well the reason, like, for example, here a lot of volume went out, but the price haven't been impacted that much, is just because there's counter flow to these liquidations, somebody who is buying them out. And in terms of risk management, I would say it's my strategy for knife catching as well, what I mostly do now. It's really quick invalidation. Like, it's either goes in your direction or it doesn't, and you don't want to keep guessing where it will go, so you just leave and you take the L. For the profit taking side, I also do the risk management. I think it's even more important. I do DCA out, so dollar cost average, and essentially I don't close my position all in one go. I close it partially as the move goes, because this way, for example, again, I was able to catch the tier B pump just from entering into a breakout.
You have multiple take profit targets usually.
Yes, and again, it comes down to, like, for example, here, one of the take profits would be this zone. Like, again, it's coming already from, chart analysis. Let me turn
what are those red and green orbs on the chart, by the way? Just
those are the power trades. So essentially, it spots the big orders going through, and related to this pane, this widget, which shows you essentially big orders going through the market. You can see essentially everything here. For example, right now it doesn't detect any like really huge large volume, because it calculates the volume based of the ADTV, average daily traded volume. So let's say for some coin, let's say for Bitcoin, like $50 million order, it's not that substantial during the good volatility moments. But for some other coins, 1 minute candle, 5 million is already like massive volume. And we can see, like, for example, for Shiba, like 1 minute, like 600K, it's just assuming it's a tiny volume for this market, for its liquidity, at least for its average daily trade volume. But yeah, it just shows you some big orders going through, and usually those big orders occur either on pumps, the first initial kind of entries, breakouts, and also on the tops, as this is the moment where the majority is being squeezed. So the most of the volumes go through here, as we can see highlighted. A lot of volumes went through here, so this is potential knife entry. This is potential knife entry. This I personally would see as well, because like right now I already know where the price went, but I don't see volume being kind of higher, and I would assume some sort of continuation.
Right.
But essentially, all of the big trades are already a reason for considering a knife.
Yeah, I mean, it looks like a good long trade so far. If you're going for a scalp.
Yes, for scalp as well. This is what my entry again, 101.7. So around here. Yeah, 4% so far, and I closed already half of it. Right. So let's see how the rest goes. Because for these knives as well, specifically for tier B as well, like I don't know if it's just some sort of dip where we might keep on going, or it's the end of tier B. Because we just discussed as well today in Spirit Fighter Discord. The tier B, what could happen is it just will, like, there most likely will be some sort of blow off top already at this point. How far it goes, there will be exponential growth up and a good knife opportunity. But there's also a chance that the price will be just like, if you take like, hourly time frame, let's say It's like, right now goes up, consolidates, and just bam. Like no sort of blow off top like this. But just like, at a certain point, it will just as well. And a lot of pumps recently, you might have seen as well, they ended, there's move up, some sort of consolidation, maybe deep, then small breakout, and then it just dies. Like this is the point, what might happen with TRB potential. It's all guesses again. We would never know, and all the future will tell. But just like, having some sort of expectations of different scenarios helps you to execute better when you already have to execute.
Sure. Coming back to the risk management side of things, are you using any sort of automation? Because obviously you've got to get in and out very, very quickly. So do you have like, when you execute a trade, do you automatically execute your stop loss? Is that, a one-click type deal where you can just click on the chart and it executes for you? Are you using any sort of third-party tools for the execution, or are you just simply making the order on the exchange?
I have a script that essentially like risk management script, which connects to my API and will close any position if the drawdown is more than I selected. So it's quite flexible in that regard. Right now it will close everything, like literally my all position in futures if my drawdown somehow managed to get more than 10%. And for each individual position, it's more than 2.5%. But I also sometimes turn it off if I'm taking a swing position, so I can just check the script and add exceptions there. So it doesn't look at that coin, because sometimes there are a few trades which for example, one of the trades I took was big time. Let's look at it from here. Quicker.
Is that 10% from the open position or 10%?
No, from my margin. From my margin.
Gotcha.
So yeah, it's something used when Fighter was a small prop, so the script still pretty much remained unchanged. But I think that was a bit different infrastructure in terms of it was connected to the to like overall server, as it was like we have made a terminal for the pairs trading, and been conducting as a prop for some time. But right now we just script running on my own server. And this was the trade with big time. I saw the dip and I just essentially accumulated and entered somewhere here. Let me check it's on Bybit. And for this, I usually just do scaled entries, because like when you have something like this, it's just I think I tried placing my limits around here, like when it was breaking out from here, and I placed them. Check my price. 113.53. Yeah, essentially like this is my average price around here, and when the price I placed scale limit in here, and it just collected from this week. Also just like 5% profit now. That's a few trades I trade. I usually sometimes look for when there is potential, already more of a swing trade, positional trade, and I do less of those, maybe like 20% of my total trading out of number of trades. But it's as well, you mentioned about the strategies that I use, so we got a bit of the track with this TRB scenario. But again, I started as a breakout trader, and then I jumped into pairs trading and overall like algo trading, because pairs trading usually quite hard to doing without having some sort of scripts to at least find your entries, find your pairs, and also manage the risk. Because pairs, for those who are not aware, it's a synthetic position where you create, for example, this is actually not the interesting pair I have here, but there was one pretty good one, IMB lever, which I posted on my Twitter, just out of like to show what it is. This is a synthetic position where we don't express IMB in Tether or leather in Tether, but we express IMB in leather price. And we just build a spread between them. And you can see that this spread is pretty good at mean reverting. First of all, aside its 240 moving average. And also aside some sort of like global mean. IMB and leather are both highly manipulated coins, and both DWF coins. So there's some sort of like there's some actual rotation from their focus, I'm assuming at this point. You can see this pump. Then as well, the spread dumped. I'm assuming it happened from the lever pumping back. So IMB pumped, lever pumped, and IMB dumped and brought the spread back. And you can see really nice reaction across this overall pair. And first of all, in order to find those type of trades, you need some sort of even a basic integration scanner, like which runs Nicky Fuller or Johansson test. But that's just one part of the equation. Then you have to already filter the pairs, and then you have to enter the trade, because in this case, for example, if let's say we want to profit from this, we will go short IMB, long lever. If we were to profit from this, we would go long IMB, short lever, because it's again synthetic position, and your profits are calculated as the difference between the individual positions. So you have, let's say, you can have minus 50% on your long and plus 55% on your short, and your profit will be 5% on the spread. And to calculate the profits on this position, you would need to constantly be calculating them yourself on a server. There's a peer protocol right now which does it for you, which is really nice to see some traders actually building the infrastructure for pairs trading, because there are literally none. If you want to jump into pairs trading, there are like absolutely no tools to make it, aside, I'm assuming, from our spread screener, which we've built a long time ago and still operating, but it will be added into Spread Fighter. We want to as well to provide traders with opportunity, to look at pairs, trade them in the future as well. We will have execution terminal for pairs. But that's what I was doing for already end of 2021 throughout 2022, during the crazy times of the market. And
the indicator below, that's the Z-score, right? That's the Z-score indicator.
Yep, that's the Z-score. Z-score as well. And I'm using combination here of 240 moving average and Z-score with as well also 240 MA and third standard deviation. And whoever is watching this, this is probably one of the most accessible ways to look and trade pairs. One of the most versatile to ever exist, and you can just simply trade it by eyeballing. There's always some risk involved with pairs. If you don't have much experience, you can end up, in a pretty unfavorable position where you have short, for example, which is pumping. And the main trick is that you cannot just place one stop loss, let's say, because again, one pair can be minus 50, one pair can be plus 55. So how do you place a single stop loss? You have to, even if you want to take a stop loss or some sort of reason to leave the position, you have to calculate the profit between profit of two positions in total. You have to look at them as combined position.
I used to do delta neutral back in the FTX days, and the easiest way of doing it would have an automatic execution bot that was getting into both the long and short of each asset at the same time. But yeah, it really depends on the liquidity of the asset, because sometimes one asset is less liquid than the other, and you can only get into small size positions and things like that. That was an additional problem that I found. It's not just about knowing exactly when the spreads converge, when they diverge or converge, can also have other issues with it as well. So, do you do it manually, or do you have some kind of bot that does that for you?
For pairs trading, I started doing it manually because we haven't had literally any infrastructure on it, and we've built it along the way. First of all, building the something to search for those pairs, integration scanner. Then we built a terminal for manual trading where you can actually the signal generation model was integrated into the platform. You also have your risk management, this prop type of risk management where you have daily drawdown, of 2.5%, and you have total drawdown of 10%. And you can also place stops and take profits there. So, which was pretty nice, considering this is a synthetic position. So I could place when the spread, for example, will reach this point, take just leave the position. Let's say if I were to enter here, if spread goes above this, just take me out of this position because it's going God knows where. Then we automated this. So we built various different algos for trading pairs, basket indices. And one of the simplest way if somebody wants to get into it, just build the simplest way, because this infrastructure is quite heavy, so as it requires you first of all, a lot of lines of code and a lot of calculating power in terms of you have multiple different positions. All of their profits have to be evaluated in the moment. All of their risks have to be as well managed, and this is already completely another topic. The simplest way is just to have your own bot where you just able to input the pairs, input the parameters such as moving average, your z-score that calculates there, and just essentially place a bot to be trading one specific pair. Let's say when deviation goes at 3 sigma or minus 3 sigma, just enter a position and close it when pair gets back to the mean.
There's a great new platform actually called Pair.
Yeah, the peer protocol. The peer protocol.
Pair protocol says, it makes it very, very easy to do it, sort of one-click trading. So, effectively you could use Spread Fighter to sort of scan the opportunities and then execute on Pair protocol and sort of use them together.
So far, that's pretty much the only option you have, because there are no tools out of either you build your own integration scanner or whatever scanner you want to use for finding pairs, or you just don't have much option. We have the only one we have right now is Spread Screener, which is still up and running as I mentioned, but there's nothing else. And I even checked recently, and I'm surprised still nobody have done anything else. But it's probably, I would say, it's just because the amount of pairs trading is not a really popular strategy. It's still kind of a niche strategy for algo traders, and when it comes to manual traders, I know very few. And combined with peer protocol for execution. If you want to do pairs trading, that's the best combo we have right now.
Yeah. What's your favorite part about Spread Fighter? Is there a particular tool that you couldn't live without? What do you really love about it?
I love all about it, but I'm obviously a bit biased in this sense. But at the same time, I'm as an intraday trader, I'm less of a developer because I learned coding alongside already after I became a trader, and the Spread Fighter is the platform which complements to my trading style, my trading preference, and not just mine. I'm assuming it's anybody who's trading intraday, who's actively scalping, who's just not just doing this a couple of hours a day, trying to find some gems, whether it's centralized exchange or decentralized exchanges. This is a platform for professional traders who actually trade for a living, and it shows you the majority of the hustle you need to see on the market. So it's quite hard. Right now without Spread Fighter, I pretty much feel a little bit blind, as I just how to find trading scenarios, because there are a lot of scanners which let you browse, Coinalyze, for example, for open interest changes, or Velo as well, which is actually also really nice as a macro analysis tool. I wish they had a bit more symbols, but they're working on it. But if you want something for actual, finding spikes, finding some emerging trends, finding something what you really want to see as an intraday trader, there are not many options you have. And I personally, wouldn't say know something what I personally use aside from Spread Fighter. That's the main reasons why we developed this platform as a team, just because we wanted, we have developed a lot of infrastructure, and we're okay, this is the tool which this market lacks, in our opinion. And obviously the manipulation package, top manipulation package, it's one of the most powerful, scanners you have at the moment in terms of seeing the hustle, seeing the volatility and activity. You can see, for example, Musk, there was actually some sort of consolidation, really nice consolidations. And what we talked as well about, nice to see those actually in real life scenarios. some sort of support, resistance levels. They grabbed the liquidity above, they went for the liquidity below, breakout. You would see this quite often. And also if you don't have this data, let's say you don't have, this haven't happened yet, if you're looking back in the days, you would guess where this price most likely go. It have less chance of going below just because this liquidity was already taken. So it might just follow this liquidity and just go here. And what is really nice about spread fighters, it shows you really early detected, first of all, the volume. Like it have two parts of it, activity and volume activity. Activity essentially responsible for showing you the price manipulation, where presence of spoof algorithms, wash trading, or even TWAPs. And there's a really nice way as well. This is a little bit of I would say information which I never found, a bit of alpha. Like if you want to make a pump, you need to widen the spread. You want to widen the spread, you just have to send order flow, just $3, $4, $5, let's say, just continuously increase in order flow. Let's say there's 100 ticks a minute. You do it to 500 ticks a minute with just essentially with orders containing the minimum possible lot. So your main goal is not to accumulate the position because you already most likely have it if you want to pump, but you just want to widen the spread so it will be easier to pump. This tool also detects those, which is really important because essentially this is something what is really hard to find yourself. Just spot manually. Market is broad. And we can see immediately the spike here on the first candle. It highlighted you the volume manipulation, again the price manipulation, and you can pretty much already apply the margin levels map, and you can see that most likely this is going here. Most likely, again, not guaranteed, but with high chances there will be some sort of chop, maybe a retest here, but the price will be expected in this zone. And if it reaches, there would be, it can always continue depending on the scenario. But this is again second favorite tool is the margin levels or liquidation map essentially.
Can you sort of break down the different colors that we're seeing in the manipulator indicator and what they mean?
It's just highlighting as well the different colors by the activity. So if it's anywhere above 95%, it's red. Anything from 75 to 95% will be yellow/orange. Anything below
yeah, but what does it mean exactly? It means
so 100%, it works as because the manipulation it's essentially it's a neural network. It's a really complex mechanism analyzing a lot of different parameters, and we just simplified it in terms of it's showing as an oscillator. So 100% meaning the highest manipulation activity at the moment. So there's a lot of order flow, potentially a lot of huge presence of various different algos, various different market participants. So essentially, it just shows you that this coin is hot, go trade it, pretty much. And not even just ape in blindly, because this is not the tool developed to detect tops or bottoms. It's tool essentially used to detect the hustle, the activity, volatility on the market. And we can see as well there was essentially as soon as it started highlighting the manipulation, there was a solid rise in the open interest. So this is a hot coin right now. I mean, we can just clearly see by the open interest and volumes at least.
Are you able to see if it's more derivative driven or more spot driven?
It's analyzing the derivatives mainly. For the spot driven pumps, because right now most of the pumps are driven by derivatives.
Yeah.
Back in the day it used to be mainly spot. But at the same time, spot and perps are really interconnected in terms of if there is no highly aggressive market manipulation, where again we have spread between spot and futures, there will be equal share, and it will rise from time to time. Sometimes spot is leading the market and futures are just following it. Sometimes and mainly perps are leading the market. But this tool that doesn't have a distinction between it. So essentially, but even though look at it from this perspective, if something pumps based off spot, there will be increase in activity in futures, and this tool will highlight it.
And what's more powerful to move the market, spot or perpetual?
That's hard to say. Like perps market is more liquid. Like if you look in the order book in terms of like it looks like it's more liquid at least most of the times. I would say if you don't have much cash, perps would be the way to go. If you're looking from the perspective of somebody who pumps those. If you have substantial amount of cash, spot would be it. Because if you're talking about spot pump, you also need futures most of the times. If you don't take spot, you just futures, and it's essentially it's more simple. Usually as well, like the smaller pumps, smaller market participants who do spikes, like quick pumps and dumps, they accumulate position in futures, might even push an order through spot as well. I'm not saying that they never use spot. Usually there will be some sort of activity in spot, but smaller pumps usually perps driven, bigger pumps usually spot driven. But again, usually market is versatile, and like looking at your B, like there can be happening weird shit.
Yeah, sure. I mean, obviously with perps, you can lever up to much larger size positions, so it could seem like the flow is, like it can look like it's a bullish flow on perps, but it's usually a cleaner flow on spot, isn't it? When looking at the order books, it's I often when I'm looking at the perp order
spot is
books,
cleaner, that's for sure.
yeah.
And again, yeah, as well, the reason why smaller pumps also, like you mentioned, really important. I completely forgot to mention it, but yeah, like you have leverage in futures, so you need kind of less capital technically because you have access to leverage. And even though, for example, Binance limits your leverage, if you don't have 100x ladder, on Musk, I think it's limited to 20. And if you have 20x leverage, your position is limited. Oh, I don't remember how much. I mean, but it's limited to like $5,000 or $20,000. I think for Musk it's might be 50. But if you put your leverage slider like in 2x, 3x, up to 5x, you can get yourself nice leverage, and you can also use multiple accounts because usually it's like if somebody's pumping, there's some sort of entity there. It's not just one guy pumping, not one account pumping as well most of the times.
Yeah. And in terms of like liquidity theory, like if you see open interest running up really, really quickly, is that usually like a bit of a red flag for you that the market's getting overheated because there's sort of a liquidity incentive to drive the price back down again? So many contracts are being opened, or is that the sign of a healthy market? Because conventional wisdom would say that open interest rising, price rising would signify a strong bullish trend. But sometimes it's not always the case, is it? Sometimes open interest can rise with the price, but too quickly and end up actually being bearish. Do you see that sometimes too?
Yeah, I will like always have like open interest as well open here just because it's I would say one of the major parameters you want to keep an eye on like when trading perps. It's probably one of the most important ones. Like it can be like trading can be done simply with just trading volume and open interest and just price, like three main parameters out of fundamental. Why I love the markets as well, because there's no kind of blueprint to scenarios like, yeah, if open interest goes like this, price goes like this, it's long, or if it goes like this and goes like this, it's short. There's always like some sort of evaluation in a scenario, because you also have to consider the overall trend. You also have to consider where price is located, because let's say if for Musk, for example, like once we have it open here, we can see an open interest increase, substantial. How much is in here? Let me just around like 15 or close to 15% again, like more than 10 out of the breakout, which is a pretty good sign usually for the breakout once you see open interest spike. Because for example, this was a fake out with not much open interest increase beforehand. We can see here as well some sort of like smooth ride up here to this high with some nice open interest increase. So there's increasing activity on the market, and somebody is interested there's, because usually open interest shows more contracts opening overall. Somebody might be interested as well in moving the price because maybe they have accumulated the position somewhere alongside here.
Yeah. Do you find that the open interest moves in lockstep with the manipulation indicator as well?
Oh, sorry, can you repeat that? I'm not sure.
Do you find that open interest movements is sort of correlated to the manipulation indicator? Like, can you?
Oh, yeah. Quite often, because usually there's some sort of manipulation happening. It's already like chicken and egg scenario. And it depends as well. There is no like blueprint for it. But usually you would see on manipulation, on those manipulations, here and here, for example, you would see some sort of open interest changes. And for example, here not particularly. But it's also coming from the fact like manipulation monitor also looks at open interest as one of the parameters. And that's why I'm saying it's also a chicken and egg problem, because sometimes you have manipulation monitor picking up some manipulations just purely like, let's say 20% manipulation as like out of 100, just purely on huge open interest spikes. But at the same time, it makes sense because, if there's some sort of activity, let's say Musk is going up right now, there's some one main entity, which is kind of like, how coming from the perspective, somebody who initiated this, somebody who's interested, or maybe like a few of them, and they just fighting for liquidity here. The manipulation monitor will obviously detect the move itself, and open interest will be rising along the way as the this whole move progresses.
Yeah, I find the way to sort of differentiate the rising of open interest with the price, whether or not it's bullish, is if it's a steady, organic looking rise of open interest, usually it's bullish. But if it's like a really sharp rise of open interest, like like an irrational rise, then it's often signifying the end of a wave or end of a trend. And you could have a pullback after that. That's kind of the sort of things that I'm looking out for. So the rate of change of open interest, I suppose you could say. So that's, I don't know if it would be quite interesting to see a rate of change indicator for open interest. Actually, I haven't seen that. That could be quite interesting to look at.
That's actually a good idea, because we also like, planning to add a bunch of different indicators, even like, we have a lot of custom made indicators here. And rate of change for open interest also sounds interesting, I'm just going to write it down.
Yeah, I'd love to see it on the platform. That'd be awesome.
All right, I'm just going to put it down into my list, because we have a lot of ideas for indicators, and not only just a matter of implementing them, but this is something interesting. It's something interesting as well. I'm not sure if there's as well. It's a unique indicator at least. Here BD, the nice knife. Oh, here as well, yeah. Close to 8% now. Some liquidations along the way.
It's absolutely ripping. You're killing it on that long run.
The late shorters.
Have you taken profit yet? Are you still riding it?
Yeah, I took some profits as well, like quite early here, around this zone when I catch the knife. And this probably as well was, kind of probably a rushed thing, because I'm assuming, like, from, with the knives catching, there's a tricky part where sometimes you see it like this, going up, and as well doing like this dip, maybe like more than 1%, and just like, final clear out. And I don't love to be in those clear outs, because again, I use pretty tight stop losses and overall, like, invalidation zones. So I usually drop quickly solid portion, my knives. If it gives a really quick impulse, because it gave a quick impulse of like what was the impulse from my entry point, like almost 2% impulse. So I dropped some there. But I'm still riding this one, and that's as well like the reason. Like I usually, like if I'm taking the breakout, if I'm taking the knife, I will be out with main size quite quickly, but I will just let the remaining run for as long as it gives me. Because right now there's a really good chance here be, and depending what will be the direction in this zone, but it's a good chance it will come back to this sort of area, like 115, maybe consolidate another deep up. And I'm just going to be riding essentially already like two long runners, one on Bybit, one on Binance, and completely non-minded.
Nice, love to see it. Love to see it. That was a great example. It just goes to show how powerful it is when you combine these indicators together. It's quite the weapon you have developed here.
Yes, and we also had somebody in the chat, going 100x long. So depending on where the person entered, I'm assuming that it's printing now. That should be absolutely printing. I don't think there's a 100x option to long tier B right now. The leverage what is maximum 20x. So I mean, there were no clear outs of 5%. So even if somebody went max left around this zone, that's some solid profits. What can I say?
Somebody in the Twitch chat said that they actually went long when you did, and they went 100x long. I'm not sure what exchange they did that on, but they said that they had just made some retirement money on that trade.
Yeah, see, yeah, I'm G along this to troll, but now I can retire.
But I think he's trolling me, to be honest, because I told him show me a P&L and he's just gone silent, radio silence on that one. So yeah, I'm not sure.
Kappa.
Yeah,
But if he actually did, that's and that's a good trade, in general. That's what I like to look for, major like deviation, major dips. And the final reason as well, what I liked there, it was like the price was like this, and it quickly spiked. Like you can see just through the candle, some big order entering. Unusual as well. I posted in my Twitter like a few things that I'm looking for when catching a knife, and one of them it's a huge market order, which you can clearly see, like from the candle itself. Like you don't even have to look in the order book. You can see that the candle just pulls back quickly in one go. So most likely somebody just entered into long there, and will most likely start pushing the price as well. If somebody have solid cash, they just need to keep on adding to position if they want to realize full size.
Yeah, that was an unusual volume spike. When you look back at all the different, the volume over the last few days, that one really sort of stands out. I guess there was quite a lot of liquidation there.
And you can see as well, like the volumes around here, so closer to this zone, and huge opening. I mean, just looking for those type of trades throughout the day, like what's happening on orbs as well right now, normal size, not something huge, but let's see as well what it shows out of the minute candles. Yeah, I mean, some sort of potential trend line here, maybe breakout, maybe not yet. We got Bell, but 35,000, yeah, really, really small, really illiquid. You can even check the liquidity, for example, like, Bell, some sort of volumes went through here on this candle. Oh, it's 5 minutes old. Let's open up 1 minute, so I'm assuming it's all done. Yeah, on this metal, but you can see that it's liquid because the signal was, like $35,000, which is nothing.
So you're looking at the manipulation indicator basically for opportunities.
Again, also something. I'm looking at those two are the main, like, I mean, those three, I would say the main, like, for finding hustle. And this already, like, margin levels, don't margin levels chart for execution. But you can see as well, RSR, for example, doing something, not the most liquid coin, but we can see, first of all, like, some volumes going through, and I mean, we can just eyeball that those volumes are higher than average. We can also see open interest drop. And how much is this drop? Like around a couple of percent, somewhat. I mean, RSR just looks like a pretty illiquid coin at the moment.
Yeah.
But you can just be aware there might be something happening, because usually as well those clear outs happen as well before the reversal, for example, or we can also, through power trades can see what GMX was shown as one of the potential coins also in Spain. We can see volume manipulation detected this spike. First of all, detected this volume spike, quite quick one. Also some sort of consolidation, small consolidation. It's just 1 minute chart, pretty much trade out. And it keeps on going. We can open up margin levels chart to see where potentially it might go. So it would be reasonable to expect it, a couple of percent off than here, maybe even up to here after. Worth mentioning as well for those who are just looking at this as well. It's never if you see I'm assuming it will in this case might just come here pretty quickly, just like this. But you never if you have an idea that the price will be at 45 at the end of the day, you don't know how it will arrive there. It might arrive there like this. So don't go 100x level long, just for the reason because it might clear you out.
I would rather wait for those pullback trades, and if they don't come, then c'est la vie.
I also don't love aping in, sometimes even able to power trade the top manipulations. You can see this first initial 1 minute candle of something starting quickly. But I'm not a big fan of jumping into those candles. I'm assuming it's the perspective if the train left the station, don't try chasing it. Just wait for another one. Market constantly gives you different opportunities. So
exactly.
If you won't have capital till that moment when you have to catch a nice train, that's already a problem.
Yeah, man, appreciate that rundown. That was really valuable. I've definitely learned some stuff there. I was going to ask you if there was any daily or weekly routines that you believe contribute to your trading success. Do you meditate, or do you have any sort of morning habits that sort of start your day in a positive way, get your mindset right? Is there anything there that you could share?
That's a good point as well, because trading looks a lot like just charts and numbers, but at the same time, and then at the end of the day, we're humans, so we have to perform. I don't have some specific routine, I have few tricks which I'll tell now, not even tricks, but just something what I like doing, maybe to cope with stress, or with put myself in a mood. In terms of starting my day, it starts super simple. I just grab myself some coffee, maybe some quick breakfast, whatever I have there, maybe some yogurt, something, or maybe some will cook. Again, ideally it's just breakfast with coffee. I'm at the computer looking at charts. Usually it starts, I use market data template here in Spirit Fighter, and I use Coanalyze for finding the bigger picture. So Coanalyze, specifically for coins which have some huge open interest spikes, because you can just go into Coanalyze and sort the open interest rise, and you can see sometimes something had 100% increase in open interest and 50% increase in price. Okay, that's not maybe the scenario you want to take as a continuation or an early setup. But if something have 50% increase in open interest and 4% increase in price, that's already a bit more interesting. You open, you evaluate, you see if there's any potential breakouts to trade, to take. And after I already go here, have market ratio, which helps to find outperforming coins in the market. For today, it's Cyber, Pepe, LQTY, Floki, TRB, obviously, and a bunch of others. So I'm also looking at what coins are the top performance today. So potential to be taking dips, into continuation, or even looking for a reversal. But yeah, my day, as I'm already explaining, what I do, to actually jump into trading session. But it starts grabbing coffee, grabbing some food, and looking at charts. I've been doing it for already a long time, and it's pretty much my routine. But I would say having good sleep is important.
Yeah.
It's really critical, and sometimes I'm not following my own rules. Having some bad sleep, but in terms of just going late, and I think if you go to sleep, sometimes I can go to sleep at 11, as for example I did yesterday, and woke up today around 7:30, quite early, just grabbing that 8 hours of sleep, 8.5. and feeling refreshed. Sometimes I go to sleep, let's say at 3 o'clock in the morning, waking up at 11, and I'm feeling trashed. So it's also about melatonin, which is a hormone of sleep. It's just, and essentially it comes to the fact that your sleep is less efficient if you go sleep late. At least for me, it's purely individual. Also, you mentioned if I meditate, I don't meditate as like, in a regular sense, but sometimes, throughout the day, especially after lunch, you sit a lot at the computer. You might feel a bit lethargic after food. I like to just close my eyes for 10 minutes, and just like kind of meditate as well, let your thoughts slide, and filter some sort of your thoughts, maybe think about something constructive, focus on, there are two different types of meditation. One, when you focus on one thought specifically, and another one where you just clear your mind and let your thoughts slide. I looked into it a bit when I was as well specifically coping with the lockdowns stress, because lockdowns in Sydney, where I live, been quite rough. The biggest one was 4 months, and I'm pretty much stuck in my place with not much option of going out, trading 10-12 hours a day. It was just real hard to cope with it mentally, and that's what I found. And it's just helpful to sort your thoughts, sort your ideas, and also when I meditate for 10 minutes, I just lay down, don't move, close your eyes, and it removes that sleepiness. As soon as 10-minute timer hit, I just wake up, essentially, stand up quickly, and the sleepiness is gone. It's a good trick which works for me all the time when I feeling kind of sleepy, tired. Just take that 10-minute, not even power nap, but some sort of rest.
Yeah.
Also,
I do something similar in the morning where I'll get my glass of water and I'll go out and sit in the garden, and I refuse to look at the charts when I first wake up, because if I do that, then it kind of wires my nervous system up in the wrong way. So I like to just sort of get out and start the day doing something else, settle myself, and then come to the computer slowly, like an hour or so after I've woken up, or an hour and a half or whatever, do some exercise in between. And I find that helps to ground me, and then I can kind of look at the markets, feeling at ease and without sort of anxiety and stress. And maybe I'll do some meditation just before or something like that, but usually just sitting in the sort of garden drinking a glass of water is enough. But just that little thing that I do before I go to the computer each day makes a big difference, at least for me anyway.
No, that's actually also really nice perspective. Just starting your day, I would say casually, in terms of not just jumping right into it, because it makes sense. For me, it's personally already a habit. I'm since I started doing intraday crypto, and for me it started as well in lockdowns and COVID, and there was not much option to go around. I usually went out for a walk a little bit after, to take that break, to think through and not rush with trades, but just like look for potential scenarios, and then already go for a quick walk. But that also, as well, I'm assuming it's purely individuals. At the same time, it's just important to find something what fits you. And like whether it's just going out first thing in the morning, which I'm assuming it's more healthy habit than mine, just jumping straight on the computer, and having breakfast here.
Yeah.
Another one as well, just classic. I'm assuming sports. My routine involves a lot of sitting at computer, or even standing. But going for walks during the weekends, even during the day, going to the gym, and combining this, just overall keeping it in a healthy mix, I would say, is really important, just because how healthy you are physically depends how healthy you are mentally. Well, I think it's not a secret to anyone already at this point.
Yeah, I often say that, being a trader is no different to being an athlete. Like, you have to keep yourself in optimal mental and physical health if you're going to perform. Well, I mean, maybe not optimal physical health, but you need to be optimal mental health at least. When I'm trading and I'm full of anxiety, then I'm closing my trades too early. I'm FOMOing and making all the sort of schoolboy type errors.
That's the moment where you have to go take a break.
Right. And I think everyone's been there. I mean, it's getting easier. The longer I do it, the easier it gets. Like you start to rewire the brain differently, and you just start to follow your systems because you've been burnt so many times that it just, it's not even worth messing around anymore. You have to take the market so seriously. So it's definitely getting easier, but yeah, I mean, having a good routine and in the morning and good habits definitely helps.
And also what you mentioned, knowing when to stop, because like if you start taking unnecessary trades, entering early maybe, or like leaving late, or like you start feeling your performance slowing down and dropping, just take a break, take a breather. It can be as simple as going for a walk for 15-20 minutes, refresh your mind, get back, and don't jump into the market straight away, but just wait for the scenario. And I also really like out of good habits, also in general, when you start your day, try to not to rush with trades, even if you took a break or didn't, or in my case, when I say, if you took some sort of extra activities before, as you do, going for a walk, doing something else before starting trading, or in my case, I just jump straight at my desk, but not rush with the first trade. Wait for the actually nice setup which you confident in, because it also puts in this good perspective, positive mood, because it's always bad to start your trading with a loss, and it's always better to wait for a setup which you usually trade, which is common to you, aside from just trying to find out essentially. And even after taking the break, if you already did some trades, start over trading, getting exhausted, take a break and don't rush, and just wait for something you truly believe in terms of just follow your strategy, don't do weird shit.
Yeah, definitely. Sound advice. Are there any sort of learning material that you could suggest to the viewers to check out? Do you have anything in particular that's helped you on your trading journey?
I watched a lot. I watched a lot of trading materials, at the beginning, and digested, already probably hundreds of hours of videos at the beginning. Also, read some books, read some materials online, and there's no particular one video I can suggest. But how to say it? It all comes down to probably ability to have some critical thinking, ability to do independent research, and topping it up with critical thinking. That would be more appropriate way to say it. Just because there's a lot of information online, and you don't know what it's they're all, how to say, I want to just, without trying to find some influencers, but a lot of people just share some 100% win rate strategy just for the views, right?
Yeah.
And finding these good materials, it's not an easy way, and usually it never starts with just, having one video you watched and yes, everything clicked. It all comes down to watching different perspective, taking all of them with a grain of salt, and trying to gauge the expertiveness, who is talking to you, who's presenting you the materials, the strategy, and as well just having critical thinking. And it's really hard at the beginning to understand and distinguish whether in front of you somebody with actual nice experience or just trying to sell your course, pretty much. But it comes down the more you watch, the better it is. And in my case as well, as I started learning a lot about scalping from the CS community, from Russian-speaking community, as I myself was born in Russia. And I would say Russian scalpers, like CIS scalpers, probably some of the best traders I personally happen to know. Because again, they're scalpers, and usually scalpers have the most realistic approach to the market, or like intraday traders, because there are no such things as like to the moon and this kind of bullshit from the peak of bull market. It's just like pure price action trading, liquidation knife trading, breakouts trading, risk management. And I watched a lot of those, which have been really helpful, and I can't recommend it to the people who don't understand Russian language.
Is there English subtitles on there?
Yes, I'm not sure as well, because sometimes it doesn't translate it properly. And as well, it would be already recommending some channels, which I think at this moment a lot of them don't trade or don't make videos. At least they still trade, but don't make many videos. There's one interesting channel as well, Yuri Biko trading. He's an order flow trader as well, trading with Scalp, with Atas, and sharing pretty interesting materials. I also will encourage, if somebody wants to learn about scalping, like actual proper order flow and DOM scalping, because there are different ways of looking scalp. But in my opinion, like scalping without depth of the market, it's a bit more challenging. It's still possible, a bit more challenging. That's it. At least first steps. There is C-Scalp TV English channel. Videos are pretty bad quality in terms of it's just like purely one guy starting record button and telling you about something, about an animation. So it's like, I would say, old school type of videos, but they share really nice fundamentals and basics. And again, C-Scalp is the trading terminal I started with, like actual trading intraday. And I would highly encourage, if somebody wants to do the same, just open up C-Scalp TV channel on YouTube. And just there's a playlist for knife catching. There's a playlist for scalping, and they also cover how to do knife catching with order flow, with order book, with DOM in general, which would be really helpful and really insightful for many beginners.
Yeah, I'm definitely going to check that out. Sounds good.
Aside from it, I actually, even surprised there are not that many, order flow traders in the English-speaking community. There's still some, but it's just not as popular. Not as popular, I would say.
Yeah, I mean, it's interesting that there isn't that many, because you've got a very unique situation with crypto where you have access to all levels of the order book data, whereas like in traditional markets, you'd have to, there's quite a high barrier to entry in terms of cost to get, to get the S&P and things like that. So it's not like it's not accessible, and there's like plenty of tools out there that give you access to that order flow, and there's definitely great edge to it. I just think that people are used to those sort of traditional indicators and basically working off of what they have off of TradingView for the most part, and
yes,
sort of missing out there. But I guess that's good for us in some ways, because we want to kind of retain that edge for as long as we possibly can. So I'm often like hesitant to sort of share these types of tools with people, because I'm always worried about alpha decay and things like that. I've seen it happen.
It could happen. At the same time, in my idea, in my perspective, those who truly trading, like scalping with DOM, it's not an easy task in the current market. And let's say you tell it to 100 people, like literally, let's say you share a literally profitable strategy, but it requires some sort of experience, some knowledge how to apply it, and just some actual practical matter. Out of 100 people you tell it to, only, I'm assuming, 10 of them will actually come to that stage where they will be already feeling more comfortable and confident, and only, I'm assuming, 2 of them, there's, if you tell, in Twitter, for example, in YouTube, it's funny because you can have a video sharing actually insightful and profitable strategies, and if like people might skip it because it might be boring, let's say if you present in a boring way, you don't have like animation, because we live in attention economy where like TikTok and Instagram reels are killing our ability to concentrate, and if video is more than 30 minutes long, people just don't watch it sometimes. It depends, but the idea is that even if you share somebody a profitable strategy, what are the good odds of them actually implementing it in the method that will make them profitable? Not always. But at the same time, it obviously makes sense to actually keep something what works for you.
Yeah, I mean, it requires discipline at the end of the day, and not everyone's wired up in that way, and they just, it takes years of practice, to be honest. I think those who sort of sell those courses and claim that you're going to be a good trader overnight after, watching a course is not entirely true. I think just the way that the brain is wired up, it just takes years and years of sort of like of sort of being counterintuitive, and I think that's something that no course can really teach. You just have to get out there and do it.
Yes, there are very few also like actually useful courses, because I mean at a certain moment there was a lot of reselling of courses, just like people trying to teach you technical analysis again, and which technical analysis works again. A lot of people say it doesn't, but it just works in a different sense, as it gives you some sort of scenarios to play, or like probabilities of this happening rather than guaranteed plays. And there are no guaranteed like 100% strategies in crypto. There are actually a few. I've seen 100% win rate strategy with really low capacity, with like ultra low capacity, but it gives you like 1-2 signals a day at best, and it's 100% win rate, but it's capitalizing on marketing inefficiency. At the same time, what is really important, you also mentioned it, is just like it takes years of practice. And like actual intraday profitable intraday trading, it's not something you can achieve overnight. It also depends. Like for example, one of my good friends, he jumped into DOM scalping not so long ago, and he, in a matter of like what I would say 4 months, managed to like come to a really solid expertise type of trader. And I seen his PNL, and it's like I'm personally impressed with how quickly he learned, but he's overall like quick picker in general. Like he learns new stuff quickly. But at the same time, most people need at least a year, just regular human beings, just to get comfortable, to find, essentially play around and find out, try a few different strategies, maybe even like, mastering one, which will lead you to other strategies or maybe improved version of it. But there's no shortcuts, and a lot of like, core sellers, they try to capitalize on the desire of people trying to get rich quickly. And during the bull market, it actually worked really well, because like, bull market, I remember, is the most greediest period I ever happened to witness myself. It was just like phenomenal. It was crazy. And right now we kind of sobered up, with this very like second year of bear market, and yeah, it just puts your brains in place, I think. But yeah, main point, in becoming a profitable trader in the long run, is just having consistency in terms of your learning, in terms of your trading, in terms of your execution, and just doing like I believe that if you want to become good at something and you put your time and effort and your soul into it, you'll become good at it. Like no matter like what's your background, but if you genuinely want to become good and you keep on doing that, it might take you a year, it might take you 5 years, but you will become good. And it's also like a solution, like, of finding yourself in the world. Because training might not be for everyone. It's a really hard job, or maybe not even, it's a craft, I would say. It's a really hard craft. But
you have to be pretty relentless with it, and you have to.
And you also have to love it. Yes, you cannot trade, because it's easy to love it when there's a quick buck in it. Especially during the bull market, where you just like can long pretty much anything. and with a really high chance you will end up making money, and with pretty solid chances again, you'll end up making a lot of money depending on your risk tolerance and how much you sized in. But like when the market is as real as it gets now, not like, during the excess liquidity period, it takes a lot of dedication, a lot of love to the market. And for me as well personally, when I found, like, I wanted to go in, I love finance, I love, global markets, economics. I have finance degree. Like it's something what always been my interest, and not just something like I'm not here only for the money. Obviously it's a source of income, but at the same time I started all of the journey like with a desire to make income, as simple as it gets. But I love learning these things, and to me there's beauty in the market.
Yeah, I couldn't agree with you more on that one. Sort of reminds me of my own journey, where it was sort of a love-hate to begin with, but there was an element of trying to solve the hypothetical cubic puzzle of the market that just, kept me going and kept me inquisitive and wanting to learn more and more. And it's paid off. I mean, I'm really starting to grasp how the market moves. I've studied all kinds of things from liquidity theory to Elliott waves and all this sort of literature and stuff like that. And the more well-rounded you become, the better you become, and more disciplined. So it's definitely a journey. I've made some terrible mistakes along the way.
But they brought you here. They brought you here.
Yeah.
Everything happens for a reason. Yes, no, trading is it's a great equalizer, I think, the markets. And in general, like trading improved my life. First of all, like I found myself trading in terms of like where I want to go, what I want to apply, and just starting as it's even really interesting for me. I started as a just random guy, trying some trading, playing around and finding out. I had a pretty strong conviction that I want to become good at it. Like it's I as well, from young age I had an idea that if you keep on doing something for long enough and you truly want to get good, you will get good. You have to have desire and you have to put in time. And I started with that idea that yes, I will get good eventually. Just by putting in the hours. And I remember watching some videos, from experienced traders, or even watching some traders overviewing different platforms, and I'm like, damn, that's so cool. For me, it's kind of inspiring that you can come to that level where you have that expertise, ability to see the market, ability to actually build trading platforms, tools. And right now it's even funny is I'm pretty much already at the other side of the screen. Sometimes, just showing the platform that me and my team, we building, sharing some trading insights. Just again, my insights are pretty simple. Just trade market inefficiencies. Yes, put in the hours, do the work, and it will all come to you. There's no cheat code to it.
Yeah, I love it. Well, on that note, we've been on the stream now for quite some time. Is there anything else that you would like to share? It's been super insightful so far. And I don't know if I want to keep more of your time or not. But yeah, where can people find you, and where can people find your tool as well?
Well, people can find me. I'm spending a lot of time in Twitter. It's Nick_algo. Also, Discord we have there, which can be found through my Twitter. The tool Spreadfighter can be found simply at spreadfighter.com. As well, access to the tools right now, there's no free access. So you have to grab yourself an access key, which is on Polygon. So you log in here with your wallet, can be MetaMask. So there's also this, and yeah, I'm not sure what else to say, but I see as well my friend Stoic also jumped in here. We also did a podcast with Stoic just, I think it was 2 weeks ago, almost 2 weeks ago. And we also talked for about 3 hours, about trading, about everything. And also super nice to be, already a guest, to be a guest at podcasts. Personally, for me, it also shows, like as I mentioned, I wanted to become good at trading, and it's just like, again, trading is really rewarding, not just from the financial perspective. Like if you're a good trader, you obviously will see it by your P&L and your account balance, but it's also rewarding in terms of it's not an easy task. And once you excel at something which is complex, it's just like, nice for your mental well-being. Like it's just nice to, like, get a hold of something complex, or something what seems complex at least. And so as a final note, well, yeah, we had as well a really good chat there with Stoic as well. He's putting in the comments. Also shared some similar thoughts here. At the same time, I tried not to be super repetitive in terms of like here we focused a lot about as well on TRB pump, how pumps played, which I haven't covered. With Stoic, it was a lot about like trading in general. Also a few similar things shared. But yeah, I'm probably already being too wordy. Just have to keep it simple, have to keep it brief. Thanks for having me.
Yeah,
Always
no,
happy.
it's been great. I really enjoyed it, and I feel like I really understand the platform a lot better than I did before as well. So you explained it pretty well, and yeah, it's just great to relate to other traders and sort of understand how the psychology aspect works as well, and sort of the mindset, because I think that really is a large part of trading. You can have all the tools in the world, but having the right mindset to actually make the trades is just as important. So thank you for sharing your insights on that as well. Yeah, so I'd like to thank all the viewers as well for coming on, and I will be posting a link of the stream on Twitter, and with some of the details about Nick as well. So I guess we'll leave it there for today, Nick. A big thank you for coming on and sharing your insights, and I hope to do it again with you sometime.
Just one more time, Gil, thanks for having me. Always happy to have a chat, with experienced traders, just to talk about the journey, because what I mentioned as well, a lot of traders who already been in the game for quite some time. Like there are a lot of similar kind of conclusions made, in terms about the markets, about the psychology, about important stuff, and it's just nice to share it around. And hopeful as well, again, as I mentioned, trading is rewarding, but at the same time, it's also rewarding, at least for me, to share some of my knowledge, which doesn't hurt me, in terms of like not sharing like pure alpha, which, like, for example, low capacity, but at the same time, it comes to fundamental stuff, which is really important to find your own alpha. I think it's really rewarding, and even if I can make at least a few traders more profitable, that will be good for me.
Yeah, man. Well, let's have one last look about TRB trade. Is that still running?
Yes, it's just, let me open it up here.
Look at that, guys. Absolutely killed it on
regular slow down, yeah.
Yeah. No.
Right now, it would be nice to see like a potential might dip. I mean, I always like, to kind of throw a few potential plays, what can happen here, and would be reasonable to see a dip, just to collect some stops. But as well, what dips, like, in terms of actual targets, which you might want to have for taking knives or anything, like when the dip happens like this, just like halfway through, this is a point where there will be a point of interest. It might stop there, it might start consolidating like this, but essentially around halfway, it will start getting choppy. and it's a good target as well to take some of your profits here. But considering tier B, most likely right now it will just keep on going up, and I'm not sure, we might see an all-time high as well here. I think it's one of the only all-time highs, out of coins which had pumps throughout the 2020, 2021. One of the only big all-time highs for this year. Don't remember anything else, out of there have been some new coins which, been trading since the beginning of this year and made new all-time high, but nothing out of substantial ones.
Yeah, maybe ING was one that's getting close to that right now.
Let me check. ING, actually, also been looking at it not so long ago, but let's put on a daily chart here. Had a pretty good rise.
Oh, do you know what we'll do just before we leave?
Okay, so I'm not sure if there's a spot which.
I'll ask if there's any questions in the chat.
Yeah, we can do it this way. Would be nice. Oh, ING have all-time high on spot from March 2021 at $25. So it's still a long way to go.
Yeah, that's crazy. It's up, well, like 4x from the bottom or something like that.
It was like $1.50. Now it's at 12, 700% pump as well. And ING did it so silently. I even when you mention ING, I've seen it going quite heavy. But it's not as covered, in general. I personally just right now look at the numbers and did from the bottom close to 800%.
Yeah, that's wild.
Yeah, and tier B from the
Pretty
same
big partnerships. So it seems like the ones that are doing very well now are very narrative driven. You've got the partnerships happening on ING, you have a lot of hype around real world assets on Link, and FXS and things like that, and those are the ones that seem to be moving quite well at the moment. I don't know too much.
And also the AI narrative.
The AI
also,
narrative.
you were saying you don't. Yeah, and narrative had pretty good pump as well in the at the beginning of 2023. I remember there was as well a big rise of those narrative traders. Because I personally as well quite new to Twitter. I never been really active there till the end of 2022. I just been essentially on my own journey, and as well probably one of the good things I can mention here. A lot of people try to find alpha in Twitter, or something what will help them, and there is certainly a lot. But I personally, throughout whole 2020 and 2021, barely looked into Twitter. The only thing maybe was the Elon Musk tweets about Doge and stuff. But that was pretty much it. I was not following big traders, and I was essentially making a lot of decisions on my own, or as well, collectively. And Spread Fighter team, we share a lot of our, trading knowledge, and a lot of it as well was developed, collectively already at this point. My all journey was essentially, I would say, mentored by our team, because again, I don't have developer background. Never did. I mean, I did some coding when I was 14, C++. I was C#. I made a random number generator, and that's it. And for the next few years, for a long time, I wasn't looking into it. But it's important to filter information. The main point here, because you don't really need Twitter, or you don't really need somebody else's opinion on what to trade, and it's really, really valuable to be able to form your own opinion about the market. Or maybe even I put a bit more clear would be say that to be able to find your own trading scenarios. That's probably it. Because when you find it yourself, you're actually able to you have a bit more understanding. Rather than following somebody else's idea, you would definitely know more if it was your idea in the first place. But it also takes time to actually build out that necessary knowledge to be able to find those scenarios.
Yeah.
Okay, let's see about the questions. Will Sports Fighter get sound alerts? Yes, it will. It will be sound alerts on the platform. We have alert section here coming soon. And it's actually coming really soon. It will be, again, alerts, pop-up alerts probably here with some sound. And also it will be, you can connect to your Telegram. So you will be able to receive alerts in Telegram bot. At first, it will be only the price alerts. Like, you can set, for example, for potential breakouts and stuff. But later we will automate as well more custom alerts, with if conditions, potentially, if manipulation is at 99% plus and there's a power trade signal, then send me a signal on my Telegram. Those will be coming as well. It's just essentially more of a development to it. They'll be increasing. But for now, it will be mainly price alerts. Also, I think next thing we'll add volume spikes alerts as well.
Will they be webhook alerts as well?
Possibly something what we haven't thought, but we're looking to as well be providing API access to the data for probably for prop plans and as well early adopter holders for the time access NFT holders. Also, the amount of stuff we want to add here, it's immense, and the amount of stuff we have ready on back end, it's just a matter of implementing it into front end, and there was a lot of work on optimization. It's just I personally wish I had more hours in a day, and so it can be a bit more work done. It's there's a lot of work overall, and we want to make Sports Fighter the only platform you would need for trading, for intraday, and there will be more. I mean, we have even one of the best parts as well with what will be coming in 2024. It's the algo builder with nodes, so essentially no code algo strategies.
Nice.
Small spoiler. It's on our roadmap though, but it's a small spoiler, and it will be really massive. And we know how to make it already. There's already essentially a necessary foundation done for it. It's just a matter of doing some more optimization. We're also working with a couple more exchanges, to add more data. Bringing some new tools out of something what we've been planning to add already for a long time, and just UI UX development stages. What I'm assuming, the spread fighter, in its full power, what we just planned so far out of what we're already working on and what we'll have on our task list, the full spread fighter power will be available sometime already in mid 2024, where there will be already no code algo builder. There will be execution terminal. There will be you see, we have a section of correlation, which is pretty much empty. Only market ratio right now is the only tool there, which is kind of related to the correlation side of market structure. Well, there will be more coming pretty soon as well about in that section. So will be powerful as fuck. That's it.
Yeah, that's going to be badass. I can't wait for that. Hours of tinkering.
Discord notice would be cool as well. We might add Discord. For now, again, it's only Telegram, and it's also adding I would say the most necessary stuff first. What do you think? Out of if you have Telegram notifications you have Telegram notifications, Discord alerts also will take us some time to build, but at the same time we can put this our human capital resources into building something else, and already after, once it's done, add Discord notifications. There's also the principle in development. Okay. Yeah, any more questions, guys? I'm still here. If you got something out, maybe last couple of questions. Last question.
I guess that'll be it. Wait, hang on. Do you guys prefer fish fingers or smiley faces? I think you could have both, can't you? Especially when you're with your girl.
Oh, that's the best answer. The best answer to this question. Done. You know,
That's it,
literally,
that's
the
it, man.
final question, the most important question of the day.
I think we'll leave it on that, mate. That was a good
We
one.
answered it.
Yeah. Cool. Love it. Well, thank you guys, and let's do it again sometime, Nick. This was brilliant.
Yeah, also, you know, happy to jump in on some other streams you have in the future. You know, just let's see, because right now we have pretty interesting market scenarios as well, which we covered already. You know, like I would say solid hour of the stream. Let's wait for some more development to this market, and let's make another live stream like this. Would be awesome.
Yeah, man. Cool. See you. Ciao.